Hey, it's Tom. In this video, I'm going to give my monthly update on how my portfolio has performed in January. So let's dive into the Freetrade app that I use to buy and sell stocks, which has both my ISA and general investing account. At the start of 2022, my ISA account stood at close to £81,000 in value. Over the course of January, a lot of macro pressure has been put on growth stocks such as Tesla. As you know by now, my main, only holding is Tesla. Tesla stock price dropped nearly 31% from the start of the year until the 27th of January, which basically meant that my balance dropped by £25,000 in just 3 weeks. On the last trading day of January, the 31st, Tesla rebounded slightly and gained just under 11% on the day. That means that my ISA balance now stands at just over £72,000. We have to double that, as I have a similar amount in my general account. Basically, my investments have gone from around the £160,000, so around £80,000 in each of my accounts, at the start of January, to being worth only £142,000 at the end of January. All in all, a painful month, following on from a painful end to 2021. Since the end of November, I am £34,000 lower than the all-time highs that I was experiencing back then. So I just wanted to give a quick talk about how I've managed to avoid panic selling and the thoughts that have gone on in my head in the past few weeks and months. First off, yes, I have had the thoughts of just selling my stocks fully and paying off my mortgage. Genuinely, I have had that thought. That thought has probably gone through my head about once a week, I'd say. But that thought is quickly followed by another, which is, why would I do that? How does that achieve anything that I've set out to do on this journey and what I believe in? And the simple answer is, it doesn't. Let me just reiterate my thoughts. I personally believe that it is not the right thing to do to pay off your mortgage, specifically at these interest rates. That's not financial advice, it's just what I'm doing and how my brain works. Furthermore, it doesn't suit me and my plan, as having that money in a house that's paid off, it doesn't help me. Yeah, it does reduce my monthly outgoings, my mortgage payment, but it doesn't create any cash flow at present, as I'm still living in that house. And also that money would potentially be better off in other buy-to-let properties, which could create me cash flows, or dividend companies maybe. Also, I've actually stopped looking at share prices on a daily basis, because, what can I do about it? I am even more bullish on the Tesla growth trajectory than I've ever been. They're at the start of that sharp part of the S-curve now, and I think these next 2 years are just going to continue to be record-breaking, quarter after quarter. It's easy for me to say this next statement, but I truly believe it, and Wall Street just cannot accept the rate of growth and profitability that we're going to see from Tesla as a business. Please keep me honest. Call me out in the next few quarters if I'm wrong and Tesla go the other way. I'm not going anywhere. I will be a Tesla investor for the next 3-4 years as a minimum, through all this volatility that we're seeing. In another video, I'm going to give my reasoning as to why I'm creating videos here on YouTube, and also some words of wisdom that I stick to myself. If my journey to financial freedom interests you, then subscribe to this channel to get the monthly updates as well as other content. But until next time, stay safe.